Hey, folks, this is an example of the model I'm employing this year here. You can see the market has dropped down below the 930 fair value gap, and I'm executing on the basis of the lower half of that SIBI at 930 candle and the first presented fair value gap, which is not highlighted, but I'll highlight it here now. Right, and the market has broke lower into the new week opening gap. Right now it's at approximately the high of the new week opening gap. And I'm initially targeting the 830 low. I'll be looking to take off a partial below the 10 a.m. low. So I want to see price get real heavy in here. Placing a buy limit order below the 10 a.m. swing low. Stop now has been lowered to the high of new week opening gap plus one tick. All right, so I want to see it remain heavy. Using that new week opening gap low into consequent encroachment of that new week opening gap. That's a permissible range, and then drops aggressively. And my stop loss has been lowered below consequent encroachment of the new week opening gap, which is those two purple lines. Okay, limit order filled. So one partial is taken there. And the stop now is lowered below the new week opening gap low. I'm setting a buy limit order in 30 low. And the volatility of this day stopped me out here. And I'm going to look to go in again and reshort it. Market returning back into new week opening gap. It's consequent encroachment level right here. This breaks lower below new week opening gap low. So now I'm going to place a sell limit order in here. I can trade to the midpoint or just below it where I have my stop loss. But I think it's going to leave a portion of that gap open. Nuke the bodies, respecting the new week opening gap low. And I want to see it slowly but surely work its way down and make a lower low. And we are in macro time now. So price should start spooling. What direction? Lower. Okay, so it's done that here. Now I'm going to look to take another partial once it makes a lower low. I do think it's going to go lower. I have a best case scenario trading down to 20,640 level with a limit order below 37 at 50. Okay, price could tap the new week opening gap low again. That would be permissible, but I'd rather see it continuously drop. Okay, that's institutional order for entry drill, which is an entry into a partial fair value gap. And we should see expansion to the downside and hit that limit order. Here she goes. So what I'm doing is I'm allowing the market to expand in the direction of an old daily low. So if you look at your daily chart, you'll see that that purple line all the way to the bottom of the chart where I have my limit order. That's simply just the best case scenario. It's not necessarily what I demand. I'll be looking to take another partial. And the stop has now been lowered. One partial has been taken again. So now I'm in a position where I don't care if it stops me out, but if it continues, that's all the better. And I have to walk away from the charts at this time. So I'm not aware of what it's doing. And frankly, I really don't care. So I'll come back periodically and just peek and see what price is doing. So I'm not really going to walk through anything in here because I wasn't watching at that time. If I would have saw it, I would have been looking at that as a potential inversion fair value gap with that large SIBI that's built, and my stock would be in jeopardy. But again, I wasn't watching at the time, so when he came back, saw that I could potentially be stopped out using that inversion fair value gap. So I'm not going to risk any more than that. So I lowered the stop there. A lot of manipulation today. Red folder day. It was pretty wild volatility, actually. My stop just happens to be above relative equal highs with no recent stop hunt. Okay, so there's a stop loss. I have an alert on my cell phone that takes me back to the charts. And I'll come back and bring it to a close.